You've probably heard the whispers, maybe even seen the headlines. Warren Buffett is sitting on a mountain of cash. And not just a little bit either. We're talking hundreds of billions of dollars. That's right, billions with a B. So, what's going on? Is the Oracle of Omaha predicting a market crash, a meltdown, a financial apocalypse? Or is this just another overblown story cooked up by the media to keep us clicking? Let's break it down. We're going to dive into the numbers, the strategy, and the real reason Warren Buffett is holding on to this enormous pile of cash. But first, a quick trip back in time. Warren Buffett isn't just any investor. He's not trying to beat the market with risky trades or hot stock tips. His style is slow, steady, and deeply grounded in principles that have stood the test of time. A few years ago, a study out of UNLV took a close look at Buffett's track record. They asked a simple question: what would happen if you just copied Warren? And here's what they found. If you bought the same stocks he did on the last day of the month they were disclosed publicly, and then sold them the same way when he did, over a span of 30 years, you would have averaged 20% annual returns. Let that sink in. If you'd invested just $5,000 a year using that method, you'd be sitting on around $18 million after 30 years. That's the Buffett most of us know, the genius stock picker, the man who sees value where others don't, the guy who turns common sense investing into uncommon wealth. But the Buffett we're seeing today, he's doing something very different. And it's catching a lot of people off guard. Let's talk numbers. At the end of 2024, Buffett's company, Berkshire Hathaway, reported holding about $48 billion in cash. But that's just the tip of the iceberg. Add in his U.S. Treasury holdings, about $286 billion, and we're looking at roughly $334 billion. And that's just through the end of 2024. Factor in the last few months of accumulating even more, and a fair estimate is that Buffett is sitting on about $360 billion in cash. That's out of a portfolio worth roughly $600 billion. Let that register for a moment. 60% of his portfolio is now in cash. 60%. That's a record. It's never been that high before, not even close. Just 2 years ago, he was holding about $167 billion in cash. Back then, that was only 28% of the portfolio. Still a big chunk, but nothing like what we're seeing today. So what's he doing? Why the sudden urge to hoard cash like a squirrel before winter? There are two popular theories floating around. 1. Warren Buffett is bracing for a crash. A big one. Not just a little 10% dip that gets everyone nervous for a week, but a full-blown 30 to 40% market meltdown. 2. It's just business as usual. Buffett is being Buffett. Careful, disciplined, and patient. Now, before we jump to conclusions, let's hear from the man himself. At the 2024 Berkshire Hathaway Annual Shareholder Meeting, Buffett said this: "I don't mind at all, under current conditions, building the cash position. I think when I look at the alternative of what's available in the equity markets, and I look at the composition of what's going on in the world, we find it quite attractive." Translation? He's not scared. He's not panicking. He's just not impressed with what's out there right now. And honestly, can you blame him? The world feels like it's on shaky ground. Inflation is running high. Interest rates have jumped to levels many people haven't seen in their lifetimes. There's war in Europe, tension in Asia, and economic uncertainty in just about every direction you look. Companies are moving production out of China, trade dynamics are shifting, and asset prices, they've been inflated to the moon by years of money printing and ultra-low rates. It's a lot, and Buffett is simply doing what he's always done, responding to what the market gives him. So let's get this straight. Is Buffett predicting a market crash? Not at all. But he is telling us something. The market is overpriced. And when markets get greedy, Buffett gets cautious. He's not calling the top. He's not timing the market. He's just playing the same game he's always played. Buy when things are cheap. Sell when they're expensive. And in between, be patient. Wait, stack your cash. Here's the thing about great investors. They don't force the play. They wait for the right pitch. Buffett's been doing this for decades, and every time, the pattern repeats itself. When stocks are cheap and the world is panicking, Buffett dives in. When stocks are expensive and everyone thinks they're a genius, he steps back. Let's take Apple, for example. It's one of Buffett's biggest winners. But in 2024, it soared so high that it reached what some call the sell me right now zone. So what did Buffett do? He sold. Same with Bank of America. Too expensive? Off it goes. This isn't a panic move. It's just smart investing. It's the natural result of following a long-term, value-based approach. Now, some people might ask, if he's not buying anything right now, what is he doing with that cash? The answer, U.S. Treasuries. Why? Because they're safe, and they're paying around 4% right now. That's not a fortune, but it's steady income while he waits for better deals to show up. It's not like he hasn't been open about this either. Way back in 2019, Buffett said, "Prices are sky high for businesses possessing decent long-term prospects. The immediate prospects for putting our excess cash to work are not good." 6 years later, not much has changed. But here's where it gets interesting. Buffett faces a unique challenge that the rest of us don't. We can invest in almost any company we want. Big, small, international, whatever. But Buffett? His company is so massive that he can only invest in the biggest of the big. If he wants to invest $10 billion, just a tiny slice of his cash, he can only do that in companies with market caps over $100 billion. Because he doesn't want to own more than 10% of any one business due to regulatory reasons. And there are only about 100 companies in the US that fit that profile. So for Buffett, it's not just about finding good deals. It's about finding good deals at scale. That's tough. That's why he's not in a rush. That's why he's waiting. Because he knows something most people forget in bull markets. Great investments don't come every day. Sometimes you have to sit on your hands. Sometimes doing nothing is the smartest thing you can do. Every 10 years or so, Buffett says, the economic skies will grow dark, and for a brief moment, it will rain gold. But only for those who are ready. Only for those holding wash tubs, not teaspoons. So, what are you holding? Are you sitting on wildly overpriced stocks, hoping they'll just keep going up forever? Or are you building your cash pile, creating a watch list, and getting ready to make bold moves when everyone else is panicking? Buffett isn't a prophet. He doesn't have a crystal ball. But he does have a strategy. And he sticks to it, no matter what. And if that strategy tells him to sell into a greedy market and wait for better opportunities, he's going to listen. Because that's how he built one of the greatest investing records of all time. Not by guessing, by waiting. So the next time you hear someone say, Buffett's predicting a crash, just remember, he's not predicting anything. He's preparing. And maybe you should be too. Final word. What do you think? Is Buffett right to be cautious right now? Or are we still in the early innings of a new bull market? Drop your thoughts in the comments below, and if you're interested in learning how to invest like Buffett using timeless principles, not hype, we've got something that might help. But for now, remember, be fearful when others are greedy and greedy when others are fearful. Because that is the Buffett way.